Chicken Genius Singapore made predictions about Tesla stock back in 2019, so let's see how his predictions turned out, and should we, as Tesla investors, me basically as an all-in Tesla investor, should we pay close attention to everything that Chicken Genius Singapore says? He made predictions about how Tesla would do in 2020, 21, and 22. So let's see how he did.
If we had applied traditional value investing metrics to the current market situations, we would have missed out on a lot of good stocks. Warren Buffett had a super late entry into Apple. He could have earned so much more. Warren Buffett also missed out on stocks like Google, Amazon, Netflix, Facebook, etc. These companies are worth over $1 trillion, making up most of the Standard & Poor's index and other US stock indexes. So if these evaluation metrics are outdated, what is the matrix you can apply and historically not miss out on stocks like Google, Facebook, Alibaba, Amazon, Netflix, etc.
Absolutely valid point here about value investing. We just can't use those same indicators and same strategies and tactics that you would use when it comes to investing into stocks like Apple, Amazon, Netflix, and Tesla stock. Then those stocks were in the beginning of their days. And Tesla stock, I still believe, is perhaps, in my opinion at least, the best risk-adjusted opportunity on the stock market right now. That's why I'm basically all in Tesla stock. I own other assets, but in terms of publicly traded stocks, that's the only one that I have.
During the earlier years before they exploded in value, they were constantly spending lots of money to grow. Wherever they earn or any cash raised through the capital markets, they will spend it on infrastructure to exponentially grow the company. And this will result in pretty shitty profits. Traditional value investing methods will not work here. Taking a look at Amazon earnings per share, you realize that back in 2005, this company is not earning a lot of money. Years over here, the initial years, these companies were spending a lot of money on infrastructure. So they were spending all the money they could raise to expand the company really fast. The way we evaluate such companies should be a matrix called price to sales ratio. It essentially means taking the market capitalization, which is the total value of the company, and divide by revenue. I'll explain this simply. If a company generates $10 billion worth of sales and is worth $10 billion, isn't it very cheap? And if a company generates $10 billion worth of sales but is worth $100 billion, doesn't it sound overpriced? Yes, this is a very simple matrix, but it has mostly worked historically. What you are looking for are companies that has a low price to sales ratio. The benchmark is 2. Anything below 2 is a good ratio.
It's a very simple metric to use, of course, and it should never be used for mature companies. We are talking about only growing companies like Tesla. I'm curious to see how predictions based on that metric turned out for Singapore Chicken Genius.
A roughly fairly priced company is around a price to sales ratio of 4. Something which is really expensive is about 8. At one point in time, Facebook price to sales ratio was about 13. So again, I summarize, a fair price to sales ratio is around 4 for a technological company. How I evaluate Tesla. I estimate Tesla's revenue for 2019 will be 25 billion. We are just a few months away. Having a fair price to sales ratio of 4 for a tech company, Tesla should be minimally worth $100 billion in the current market, and that translates to roughly $600 per share in the current markets.
So let's start with this prediction. So this video was published on October 12th of 2019. And Chicken Genius Singapore said the revenue would be 25 billion for the year of 2019, which is pretty close. So that's pretty good. And he said the stock would be worth basically $600 per share, which, when we do some math here, 600 divided by 5 for the current split, we get $120 per share. So let's take a look. So at the time of the release of that video, Tesla stock was about $50 per share, a little bit under that. And very soon it indeed caught up to $120-ish per share around end of January. So that's pretty dead on as predictions go, because that's basically a more than a doubling from the price of that Tesla stock at that time. So that's pretty dead on. That's pretty good. My personal belief is that Tesla stock will go to $10,000 per share by 2030 because of full self-driving. You can subscribe to the channel, see full self-driving videos, how cars now can just go without any interventions for 18 minutes in San Francisco, difficult conditions, no takeovers. Watch that video. It's on my channel. I posted that one a few days ago. It's also going to be pinned in the comment below and in the description. So looking at this first prediction, Chicken Genius Singapore definitely gets my stamp of approval from me as a serial millionaire entrepreneur and investor. Definitely so far so good.
On the left column here, we have US deliveries. This means the cars coming out of USA. On the middle column here, we have China deliveries. Means these cars are coming out of Gigafactory 3 China in Shanghai. Over here, this is German deliveries. According to inside sources, the next European Gigafactory will be in Germany. So for now, I take that inside source as a very high probability and putting it in Germany. And this is the numbers I estimate. So now 2019, these are the numbers, and every year after that, I actually have a 30% increase. So that means to say, I already discounted Elon Musk by a massive 20%. So these are very conservative numbers. And now let's go to China. Shanghai's Gigafactory will be up in like 2 weeks time. In year 2020, I estimate that Shanghai Gigafactory 3 will produce 150,000 cars, which is what Tesla is reporting, but I'm a little bit more conservative. And because it's China, I'm going to have a 40% growth each year. So every year I multiply by 1.4. And now moving to German deliveries, Gigafactory will be up and they'll be producing 100,000 cars and they'll have annual 50% growth. To summarize this chart, it's a conservative projection at a 20% discounted growth.
So let's see how the deliveries turned out. So in 2019, Chicken Genius Singapore said that deliveries would be 360,000, and they turned out to be pretty close. For 2020, we had a prediction of 612,000 vehicles delivered, and the actual number turned out to be almost 500,000, so that's substantially off, even though these predictions were quite conservative. And then we got 21, which was 811,000 vehicles delivered for 2021, and he actually had 936,000 vehicles delivered. And for 2022, this prediction of 1.17 million, I think, is going to be extremely conservative, and Tesla will easily blow this out of the water. And then when we look at the predictions for 2024, based on the formula that we had earlier, if we adjust this for a stock split, we will have a projected Tesla stock price of 528 for price to sales ratio of 4. And that's for 2024. And keep in mind, these were conservative projections. So these are definitely not too far off, as in then the projections were very conservative. And of course, what is actually happening, I think by 2024, the price is going to be a lot higher than that. And if you apply the price to sales ratio of 8, which could easily happen, we saw our companies listed before in the video where companies were as high as PS 8. So that would put the stock price at about $1,000 after the current stock split, which I believe $1,000 by 2024 for Tesla stock. I think that's easily achievable. We were already at that point. We just need to get back up to that. So Chicken Genius Singapore definitely has my stamp of approval from me as a serial millionaire entrepreneur and investor. And I would call him a rather conservative Tesla bull. Although at this moment, he does have a short position against Tesla while keeping all of his Tesla stock at the same time to protect himself against potential downside, which I would not do. I would just keep a stock and not do anything with shorting or anything like that. That's just my personal preference. And Chicken Genius, of course, believes that there is going to be a recession. And based on these 4 quadrants of the market, the stock market here, it would appear so. For Tesla, however, earnings are increasing overall. Deliveries are increasing. Production capacity is increasing. New factories are being built. We have Giga Shanghai expansion. We have Texas Gigafactory being built and now being operational. Same with Giga Berlin. And there's another factory that Tesla is actively looking into to place somewhere in North America. Could be Canada, maybe. Could be Mexico. Could be USA. And rumored, not confirmed, pending Indonesia, maybe, perhaps. There's so much going on for Tesla that even if a whole market tanks, I believe the fundamentals of Tesla will keep improving. Now, the stock market could remain irrational for longer than you could be solvent. So you got to keep that into consideration. If you have any margin, which I would never use that under any circumstances unless it's like 1% of my portfolio and I only need that for like a few days. I would never do margins, especially when having a stock like Tesla, which could be extremely volatile to insane levels. So I would never do any margin at all. I would not borrow against any of my portfolio in stocks. So fundamentals of Tesla are clearly improving. There's no doubt about that. It's absolutely clear. Another fundamental that is improving very quickly is full self-driving. 18 minutes of no takeovers. One of my last videos. We didn't really see videos like that a year ago, and Elon Musk says and believes that by the end of this year, full self-driving will be safer than human driving. I don't know if that's going to happen. I'm just betting that full self-driving will be solved first by Tesla before anyone else does that. So whenever that happens, this year, next year, 5 years, 8 years from now, to me, it does not matter. I know when that happens, Tesla stock will skyrocket. That's why I have a $10,000 price target for a Tesla stock by 2030 for myself. It's just my personal opinion. If you follow my advice, just assume you're going to go bankrupt. So if you make any money, that's all your fault, not my fault. And if you lose all your money, you can only blame yourself. With that being said, I will share everything that I'm doing with my Tesla stock, which is I'm going to keep it and I will buy more shares of Tesla stock. No matter if there's a recession or not, even if there's a depression, I'm not going to sell any of my Tesla stocks, even if it drops down 90%, 95%. And we saw crazy drops recently in crypto. And you look at Netflix, it's not looking good this year, and many other companies. And you look at the Great Depression that we had 100 years ago, roughly, the stock market then down an insane amount. So even if that happens, I will still keep all of my Tesla stock because eventually fundamentals win over the market's irrationality, which again could persist for a substantial amount of time, but eventually fundamentals always win in the end, which is why I only own Tesla stock, which I made a video about why I only own Tesla stock. Of course, I have other assets. I have private businesses, real estate, but when it comes to stocks that you can buy on a public stock market, Tesla stock is the only one that I own. My name is Matt Posius. I'm a serial millionaire, entrepreneur, and investor, and I will see you in the next video. Thank you so much for watching.